Congressman Pat Tiberi, chairman of the Subcommittee on Select Revenue Measures, held a hearing as to how Congress should evaluate tax extenders. In his opening statement, Chairman Tiberi said, quote, "The days of simply rubber stamping the extenders package are behind us. Today, we pivot to exploring ideas on the framework that Congress should use to evaluate tax extenders." Witnesses at last week's hearing shared their views on the principles of good tax policy and the specific metrics against which Congress should test the merits of particular provisions.
So is it better from a policy standpoint to allow a more private sector market-based approach to use a credit but then allow also the formation of capital to do that project, or just have some entity go and file a grant application with HUD and get it done that way? Rather than relying on government to give them some benefit through a bureaucracy, have a tax code that can be more responsive to what they can do in our communities to improve the quality of life in our communities.
There are some different advantages and disadvantages to using these different, I call them tools of government, spending programs versus tax programs, for example. With the low-income housing tax credit, for example, the way that's structured, the private sector does have some incentive over time to ensure that the projects that are built stay in compliance with the rules. So it was a way to bring in some private sector management experience there. It appears that the mix of these programs is just not very transparent to many people. They're either not claiming anything at all, even when they're eligible, or they're using the wrong program. They seem to be overwhelmed by the choice here, and it's resulted in confusion and people making bad decisions from their own financial self-interest perspective.
Does anybody else on the panel have a thought on that in terms of the relationship of current grant and loan programs that are administered through a massive bureaucracy in Washington versus just allowing the tax code to be a better tool to stimulate private sector investment in our economy and our communities?
Yeah, just one more point about that. The grant programs are extremely important, but it's the tax credits, low-income housing tax credit, new markets, that are the engine that drive these deals. So the grant programs alone are not enough to move forward on most development projects in most communities. You need a combination, typically. But the biggest resource, the most powerful one, is the tax credit. So I think if we lose the tax credit, or it's not extended, or there's uncertainty and we're not getting the yields we need, it's going to have a detrimental effect on our ability to do more projects in very targeted communities.
Just an aside to add to what Mr. Gerlach was talking about, I know in my district, which is urban, suburban, in my current district, the fact is if you and I drove through it and saw the differences of housing policy at the federal level between a housing authority, a HUD property, versus low-income housing tax credit policy, or go to a new market tax credit policy that has private sector involvement and oftentimes local support from cities and counties, the differences are unbelievable.